You know, young rich niggas.
Welcome to this webinar where I analyze the weekly commitment of traders report. As you know, this report is always 3 days out of late. It is released on Tuesday and published on the COT website on Friday evening. And when you look at my analysis, on the very first column, I have open interest. Open interest is simply volume. This is the same as the volume that you see on the charts. This volume down here. So as you know, in forex, the volume is usually not 100% accurate. It's a proxy. So to get a more clear picture of the volume, I look at the open interest in the COT report. If the open interest is changing or has a significant change from the previous, then that is something that we need to go to the chart and investigate further. Maybe the market is at the bottom and the buyers are coming in, or maybe the market is at the top and the sellers are coming in. And when I talk about buyers and sellers, these are only non-commercial traders, and these are the large hedge funds and large corporations who trade very big lot sizes. So these are the people who follow the trend, and we want to know what they are doing, where they are placing their money on, to get a feel of the market sentiment. So next, these figures here, they are the net long and the net short. Now what is important is the net long or the net short difference. So whenever you see a blue color, a yellow color highlighted, that means that the market is net short. That there are more sellers than the buyers. But like in the case of the pound, when you see now the blue color, that means that there are more buyers than the sellers. And when there is a shift in the market sentiment from bullish to bearish or bearish to bullish, you will always see me highlight that with a red alert, this box here. So you can see we shifted from yellow to blue. That will instantly tell you that the sentiment has changed. And for the pound, indeed, if you look at the pound chart and the pound pairs, since the shift in sentiment on April, the bulls have been seriously buying. Look at something like pound yen. You can see the monthly candle is more than 1,000 pips. And when the shift in sentiment happened in the commitment of traders, it was on April, this candle here. So here comes a shift in sentiment, and then the buyers come in very strongly. Not only this pair, also when you look at pound New Zealand dollar, it's breaking out. Pound Audi, it's breaking out. So this tells you that these non-commercial traders, these are people that we don't want to ignore. We just want to know what they are doing, and the only tool to help us see that is the commitment of traders. So many may argue that it is inaccurate because it is 3 days out of date. But for the swing traders and the trend traders, these are a very important tool of analysis. So the COT always starts with the Canadian dollar. So you're going to feel the data. So the open interest here is 184, 106. The longs we have 28, 187, and the shorts we have 61, 730. Now the net long is much or less the same. So for the Canadian dollar, if you look at the card pairs, like for the USD card, so the card has been when the monthly candle opened, the bears almost instantly came in and pushed the market lower. But as you can see in the commitment of traders, the non-commercial traders are not buying the card. In fact, they are selling the card. And they have been selling the card for the whole of the year. So what we are most likely to see here is a week. By the close of the monthly candle, most probably, you're going to see price go back up and leave a deep lower wick. Also, another thing to know about the card is that it is correlated with oil. It is positively correlated with oil. So, and when you look at the oil prices, they are falling. Okay. So if the oil prices are falling and the card is strong, of course that is an anomaly. And by the close of the monthly candle, should watch the USD card. This is most likely going to be a deep lower wick. So let's move on to the CHF. So the open interest for CHF was 36, 128. The longs were 83, 22. The shorts were 13, 173. So the net short is much or less the same. So even for the CHF, you can see the volume is relatively low. So no much change in the open interest, and also the number of shorts. The non-commercial traders are still short on the CHF. So when you look at the CHF pairs, when you look at the USD CHF, so you can see it has been sitting on these long-term support for some time now, and this is the monthly time frame. Of course, I look at the slower time frames because the commitment of traders is more accurate in predicting swing trade or long-term trades. So again, when you look at the CHF, the monthly candle opened and almost immediately the bears came in and started selling. But now the price is at that point where it's suitable for the buyers to come in again. And by the close of this candle next week, you are most likely to see price going up and closing above the opening, similar to the USD card. So all these are opportunities. So let's move on to the pound. So as I was saying, for the pound, there was a shift in market sentiment on 18th April from short to long, when these non-commercial traders started heavily buying the pound. And as you can see, the net long difference has been increasing ever since. It started as 1,300, then 5,000, then went to 1,000, then 4,000, then 12,000, 11,000, 13,000, 12,000, and 6,000. Now let's see the net short difference for this week, if there has been a significant change. So the open interest is relatively high, 226, 505. A slight decrease from the last weekly open interest. The longs are 101, 567, and the shorts are 54, 959. Let's see the net long difference. Of course, it's the largest net long difference ever since the shift in the sentiment. And what this is telling us is that if you try to sell the pound right now, is like committing suicide. You will definitely blow your account. It's the best thing to do is look for a pullback and join the trend. That is a buy. So let's look at a few of the pound pairs. So as you can see, GBP AUD, the bears, when the monthly candle opened, the bears pushed the market down, but at some point, buyers coming in, they started coming in, and eventually they overwhelmed the sellers, and now the price is rising very fast. And we will see, by the close of this monthly candle, maybe we will see new highs made on this trend. Same case to the GBP NZD. And see, price is already above the opening, although when the candle opened, price was pushed low. So this is a bullish trend. GBP card can see the trend is bullish, and by the close of the monthly candle, maybe we will have made some new highs. So the pound is extremely bullish, and we are seeing the trend getting stronger and stronger. For the pound yen, the market has moved more than 1,000 pips for this month only. Yeah, you can see the bulls are on steroids. So let's move on to the Japanese yen. So the open interest here is 238, 556. The shorts are 32,000, 244. Longs are 139, 900. So the net short difference is so let's calculate. So it's 107,000. Last week was 106. So also the open interest is much or less the same. It's the average, the one that we've been seeing. So let's look at some of the yen pairs. Of course, this Japanese, British pound, Japanese yen. So when the non-commercial traders are selling the yen, they are buying the pound, and it's very clear on this chart. USD JPY, can see the trend is extremely bullish. Most of the yen pairs are bullish. CAD JPY, can see. So even though the non-commercial traders are selling the CAD and the yen, they are more bearish on the yen than on the CAD. Can see the monthly candle is around 600 pips. AUD JPY, same case. NZD JPY, same case. New highs and being made. Yeah, so that's the yen. Extremely short on the yen. So let's move on to euro. So for euro, the open interest is 732, 979. So the average, no much change in the volume. The longs are 229, 399, The shorts are 84,000, 750. So the net long difference is 144,000. The last week we had 151, the previous one 158. So it's still average, much or less the same. Some of the euro pairs, like Euro USD, seems the trend is bearish. See the last monthly candle was extremely bearish, and we wait to see for the close of this month. So the thing about the dollar is that the dollar being the reserve currency of the world, and the commodities are priced in dollars, so it's hard to keep on the number of contracts that are traded on the dollar, because it's dominating most of the aspects of the market. So you cannot really say that there can be a report on the dollar. So we only get data on all the other currencies other than the dollar on the COT report. So for the other euro pairs other than the euro dollar, you can see the euro NZD. The market has been opening and the bears coming in, but by the close of the monthly candle, the euro bulls are coming in. Same case to the euro Audi. You can see the market is most likely to close above this opening for the monthly candle. Euro JPY, same case, extremely bullish. So all these other pairs other than the euro dollar, they are bullish on the dollar. The euro pairs, they are bullish on the euro, sorry. So the euro is the euro and the pound. Those are the pairs that you should be looking to buy. And when you look at this data from the beginning of the year, it's all blue. So from January, blue. This means that the non-commercial traders have been buying the euro all through. So in the case of the pound, the shift in sentiment happened on April, the third week of April. But for the euro, the non-commercials have been buying all through and through. So let's go to the New Zealand dollar. So for the New Zealand dollar, the open interest is 32,401. The longs are 10,867. The shorts are 13,526. So this is the largest net short difference for the last few weeks. You can see the open interest is relatively low. So since the beginning of the year, the non-commercials were buying the New Zealand dollar, but at some point in March, the second week of March, there was a shift in sentiment from bullish to bearish, and since then they have been selling. So you can see there is a red alert here showing that there has been a shift in sentiment. So the color changed from blue to yellow. And the market is still bearish on the New Zealand dollar. So as you've seen, most of these New Zealand pairs, like the Euro and ZD, see the market is they are buying the Euro and selling the New Zealand dollar. Something like our New Zealand dollar has been in a long-term consolidation. So the market is short on the New Zealand dollar. So let's go to the AUD, the Australian dollar. So the Australian dollar, it's at the bottom. The last currency. Yeah, so down here we have the AUD. So the open interest for the AUD was 149,898. So it's relatively low, just like the New Zealand dollar. The longs were 45,743. The shorts were 95,359. So the net short difference is 49,000. Last week was 61,000. So it's still the market is still extremely bearish on the AUD. So just like the Euro New Zealand dollar, the Euro AUD is also bullish. So they are selling the AUD and buying the pound, the Euro, sorry. AUD New Zealand is also bearish. See the monthly candle is leaving a deep upper wick. Yeah. So those are the major currencies in the CO2 report, which are released every Tuesday and published on Friday. So the takeaway is that the non-commercials are extremely bullish on the pound and the euro. So as you plan your trades, plan them in that direction. Don't sell the pound when you see a minor pullback, because the dominant trend is bullish. Same to the euro. So the next week I'll update the report. So see you then.